This property, I mean, you can look it up. It was in St. John, New Brunswick, multi-unit build, probably about 4 years ago or so. And they were 70 or 80% complete. You know, all the framing was done. I think they were even at the drywall stage inside for most of the units. And got a call one day and said, you know, there was a fire. There was a fire in this place. And I was like, oh, that's unfortunate. So, you know, just kind of scrambling to look at our exposure on the file. And we had, you know, close to $1 million out at that point.
Hey, everyone. Thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal, Andreino, and Ryan MacNeil. Enjoy.
All right, everybody, welcome back. It's episode 107 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neal. Neal, how's it going, buddy?
Good. We haven't done this in a very long time.
Feels like years.
It's been a while. Everyone listening to, you're probably tired of our conference noise in the background, people clanging and noise going. They're a little noisier.
The reception's been pretty good though. And definitely encourage people to go back and listen, especially the most recent one with Nick Cipriano from River Rock, absolute legend in the industry. And that was pretty incredible conversation to have with him. So highly encourage you to go back and listen to that one.
Very professional fellow.
Absolutely. So just to put a bow on that, Neal, I mean, it's been the last 5 episodes, but what'd you think of the conference overall? Good experience, bad experience, mixed feelings, or what are you thinking?
Conference was a good experience. I mean, we had, what was his name on there that was part of hosting it?
Shane Lacani, yeah.
Yeah. But it's an interesting way that they handle it where they don't charge brokers to come out, which I think is smart because it really crams the attendance up, because a lot of these conferences now are so expensive.
Yeah.
Like it's $500 to $1,000 a ticket for everything now. And so if you're kind of on the fence, it's an easy way to bow out because you're like, well, I'll save myself $750 to go to this. But in this case, I think it pushes the numbers up a lot. So for us, I think it was great. And I think if you're a brand trying to get exposure to brokers, it's a great way to do so. And it's definitely worth it for you to pay for a booth to be there.
Yeah, although it sounds like it's changing a lot next year. And I got some pricing on booths next year, and the price is more than doubled. So I had...
it's a shit conference.
Exactly. I had some frank feedback for the guys there, but their justification is that they're making it like a week-long event now. It's like a 2-day conference versus 1, and they're doing their awards at the same time. But like, anyways, we'll have to think long and hard about that one. But I thought it was a cool experience, Neal. You know, obviously, like you said, you know, people stopping at our booth every couple seconds to snap pictures and look up what we do, and obviously having some big guests on there too. But it was good times. It's good to be back in the saddle, though.
Not to keep hammering on it, but we've brainstormed a few ideas on how to kind of make a booth really interesting and engaging for people. And I think personally I had some ideas that I thought would be for sure hits, and they weren't. And then this one, I would say, if we wanted to be standing there and talk to every single person that went by, every person happily would have come over. And it was probably like 20% of people were probably taking a picture. Like, it was a lot of people were stopping. If there was a crowd going by, at least 1 or 2 people were stopping and taking a picture. So it was really successful. But final point I'm going to make on a 2-day conference, like I feel like a 1-day conference also makes it really valuable, because then people are like, well, I'm just going to go on that day. The second you start doing these multi-day, nobody goes every day. Anyways, last point.
100%. And I just came back from the Mortgage Professionals Canada National Conference in Ottawa, and it was a great event. You know, great speakers, but same thing. You know, it's a 2 full day event. It's a Sunday, Monday, which, you know, you get a lot of people. I had a lot of brokers tell me this should be on Saturday and Sunday, and like I'm thinking in my head, I'm just like, it should be Monday, Tuesday, right? Like I don't want to be away from my family on the weekend either, but you know, it is what it is. Everybody wants to fit their schedule in a different way. But what I was going to say is that nobody was attending every session on a 2-day conference. No one is, right? And it does give you opportunity to get out there and network and socialize, like outside of the events, which is also valuable. But I do feel a lot of these conferences could be kept to 1-day events.
I agree. It's funny. That's there's that thing where it's like, if you don't make your business your entire life and you want to have a family outside of this, like that's like the choice you have to make. It's like, I get it.
Just one more note before we go back to normal here, Neal. I can't stop thinking about our condo experience, our Airbnb that we had when we were in Toronto. Feels like so long ago now. It was over a month ago, but do you want to walk the listeners through like our experience going into this place?
We rented a condo, but it was a walk-up condo. but the building is 40 stories. So
that's a good way to put it. Yeah.
This building, I mean, again, if you're from Toronto, this is no surprise to you, but if for, I think, a lot of our Atlantic listeners, like the size of buildings that they build are immense. Like this one was probably actually like 60 stories, maybe?
Yeah, I think it was somewhere around 50, but yeah.
Yeah, say 50 stories, but and then they probably have, I'm guessing 10 to 12 units a floor. So you're looking at like 600 units in a building.
Mm-hmm.
And so when they built it, they put in 6 elevators, which feels like when you're standing in a bank of 6 elevators, you would assume it can handle the capacity. But for whatever reason, I think they had a sprinkler break or something. They lost half of the elevators.
Mm-hmm.
And then if you're also, as you probably know, in these taller buildings, they only go, each like bank of elevators does a certain range of floors.
Like 0 to 30 and then 30 to 60 type thing. So
I guess the way it works is majority of the traffic was taking place on the floors that we were on because they're Airbnb-able floors.
Yep.
And so that was on I think that was the top half of the building.
Yep.
And you just come into the lobby and there's 30 people waiting for the elevator. Mm-hmm. Every time it comes, which is every 7 minutes, like it fills right to the brim. Yep. And then it's gone. And then you're just stuck there waiting again. But there was an alternative, which was we were close enough to the midpoint of the building where we would take the opposite elevator, get off, and then was it 5 or 6 stories we were walking?
Yeah, I think if I recall correctly, we were on 21. And we had to go to floor 15 to get off at like the rec floor where the gym was.
Yeah.
And both entrances weren't even open. We had to go across the hall or down the hallway, up a different staircase and up 6 floors to get to our condo. And every second floor we passed was all torn up, and it was just, it's a disaster. And like, this building isn't even that old. This building's probably like 15 years old, right? Like, it's just,
the gym,
I don't know,
torn out, but they had it still open. And I was in basically 10 square feet of gym with just a bunch of random pieces of gear.
Yep.
And me and this old guy were just staring at each other, getting our pump on. It was rough. I'm sure they're doing their best to try and maintain it. It sounds like they're doing a good reno, but the elevators were
chaos. I've seen it bad in condos in Toronto before, but never like this. And it just, talking to some people who live there, they're just like, yeah, this is the way of life here. This is what we live in.
That is so psycho. It's part of your commute. Crazy. It literally, from the time you get to your lobby, you could easily be 10 to 15 minutes before you get into your house.
Do you remember once I think I forgot the keys in our condo for the car, and we're parked on like P5, the very bottom floor, dug deep under the ground, and I have to go all the way back up, and probably 20 minutes later before I get back down to you. But anyways,
there was nothing nice I could say.
Nightmares.
I'll just go grab them. I'm like, nah, I can't do that.
Just last note before I forget, like this will be dated when the podcast comes out, but it's October 23rd today. The Blue Jays are going to the World Series. Absolutely insane. You're going up for game 2. I might be going up if it reaches game 7, but like this is something that I brought it up with you the other day, and I was like, I was 8 years old when the Jays last made the World Series, right? And I got to live through some playoff baseball when I lived in Toronto 10 years ago, but they never made it this far, and you literally weren't alive when they last made it. So pretty cool.
Very cool. It's a pretty crazy opportunity, and I'm excited. Hopefully they kill it. I've heard LA is a pretty hard roster to go up against, but
yeah, they're the best, but you never know. It's a World Series, right? So anything can happen. You got to get your pitchers or your batters hot or both, and then you never know. Could be celebrating a championship in the next couple of weeks. So we'll see, buddy.
I'm excited to fly up tomorrow.
Yeah, absolutely. Okay, so today we're going to pivot. It's been a while since it's just been you and I, but we're going to get back to our old ways here. This is one we've hinted at for a while, Neal, right? We've been talking about different insurance requirements for private lenders. So where we're going to dive in today is kind of across all aspects of insurance, and that's on like individual loans, but also to protect your business and your portfolio. Yep. So, obviously, want to welcome everybody back to the Canadian Private Lenders podcast. So as you guys know now, we dive deep into the private mortgage lending space in Canada. We've got some big episodes coming up here in the future. There's been some big news in the space recently, so we're going to get into that over the next couple of weeks as well. But excited to dive in today. Neal, anything you want to add before we dive in?
No, let's get to it.
Beauty. Okay, so let's kick it off with the most boring type of insurance I've ever heard of in my life, title insurance. So I'm sure my friends at FCT will be happy to hear that, but I think they probably admit it themselves. So Neal, do you want to walk through title insurance here?
I'm not as proficient with title insurance. I've paid for it 1,000 times. I would say if you want to walk through it, I might have a couple questions for you.
I wouldn't say I am either, to be honest. I usually just leave this to the lawyers and the professionals. We probably should have had Craig or someone to come on to talk about this. Okay, I'll take it here, Neal, and we'll see if we can fight through it here. But
in private lending, time is everything. The faster you move, the faster deals close. At Mortgage Automator, we build a platform that transforms how credit unions and enterprise lenders originate, service, and scale their business. No spreadsheets, no chaos, just precision, automation, and control. From loan origination to servicing and investor management, every step is seamless so you can focus on what matters most: growing your portfolio and customer base, not managing it. From AI to compliance and everything in between, Mortgage Automator is trusted by hundreds of private lenders across North America and is the highest rated platform on G2 and Capterra. Mortgage Automator, powering the future of private lending.
Yeah.
Basically, the purpose of title insurance is to protect the lender and sometimes the borrower against issues with ownership on title. Okay, so very simple, straightforward. Yep. So title insurance is basically required on every single mortgage. So, and that of course includes private ones as well. So we include this on every single transaction we do. It's a critical piece of insurance to have. Okay.
Yeah. If you've bought a property, you'll see it on there. It's usually a couple $100s for like a normal home. It's not a huge expense, but it's something you'll see on your closing.
Yeah, I think it could be anywhere from like $300 to $1,000, depending on the type of coverage you need. But not one of the biggest expenses you'll see on there. But basically, the purpose of this coverage is to cover things like undisclosed liens, title fraud, or errors that were made on registration of the mortgage as well. Okay.
Yeah.
So, and it's typically, like I mentioned off the top, like this, a lawyer is typically putting this insurance in place. So like, the people at Chicago Title and FCT, the bigger title insurers in Canada, they will actually be marketing their product to lawyers versus lenders. So they're actually going there to market their product because the lawyer is typically the one that making the decision on the policy, unless the lender has a prearranged agreement, and some of them do. And we've got some strong ties with title insurers that we have a preference towards that one, or exclusivity depending on the situation.
Yeah.
And basically, lenders also get their own lender's policy separate from the owner's policy as well. So, for example, sometime that this could be used, like a borrower's lawyer misses a lien registration. So a title insurer would actually step up and make the lender whole in that situation if there was a loss or a risk of loss there. Okay. And I've seen title issues before in the past on private deals too, where we've actually filed a claim and it's come through and the title insurer actually covers that loss.
Okay. I was going to ask you if you'd ever made a title insurance claim, because I personally have not.
Yep. I can't remember the details of it. It was a couple times in the past, but I think it may have been like a second mortgage or something like that wasn't properly registered, or, there was past title issues on the property that were from 100 years ago type thing. But they do step up in those situations. And that's why like the premium here, it may seem like a lot off the hop, but like you want to be protected from these issues when
you make a claim,
lender.
They're quite expensive.
Exactly. So it's basically the last step in ensuring the property is properly registered. Okay.
Yeah.
So I think that's it on title. So Neal, why don't we go through probably the most common type of insurance, would just be your standard homeowners insurance.
I know this one, home insurance.
You know this one. Okay, let's go.
I've got this one.
Who are you, a TD Milosh Monix guy or what?
Well, so I
mix it up.
All of us had to be a TD person for a while because they asked no questions. You just gave them an address. Then they were like, okay, is there 3 or more related parties living in the house? And I was like, no. I'm like, okay, your insurance is $40 a month. And you're like, how are you 1/10 of the price of the next guy? And you asked me no questions. Yeah. I think making a claim with TD might be impossible, but their rates were literally unbeatable.
Yeah, you just hope you don't have to make that claim.
Yeah, exactly. So they've been great for that. But now, unfortunately, everything's with these commercial policies, which are not free at all. And they're very detailed in exactly what they cover. But yeah, so home insurance, you guys all know what this is. It's obviously insurance on the actual physical structure of your property. It's mandatory for any mortgage to have this. One thing I want to mention actually on this, we've been saying any mortgage. And I'm thinking of a scenario in my head where someone was doing private loans themselves, and they didn't confirm that there was title insurance, and they didn't confirm that there was property insurance, and they ran into issues with that.
Yep.
So it's mandatory on funding any mortgage with a well-run mortgage fund or any proper lender.
Yep.
But you really, really should always have it in place, no matter who you're borrowing from, even for your own coverage.
Yep.
The policy needs to list the lender as first loss payee. So I never noticed that when I was buying houses, but in the commercial world, I see it now where whoever's doing the mortgage, you need to get them put on the actual insurance policy as the first to be paid out. Mm-hmm. And they're going to probably request this, that it's going to either need to match or exceed replacement value. So there tends to be a lot of difference now. And I think that's with the growth in property values and the value of land that you're seeing this difference of, okay, well, I bought the house for $1 million, but then the insurance policy came in and said replacement value of $550K, but I'm getting a mortgage for $900,000. And so oftentimes now you'll see the mortgage lender come back and say, hey, no, that policy needs to cover $900,000 worth of coverage. Or sometimes they say, like, you can't rebuild that house for $500K. You need to, or you maybe need to get more insurance than what you paid. Like, let's say you got an amazing deal on a house that's $2 million house for $1 million. They might say replacement value is $1.5 million. So you actually have to get more insurance than what you're paying.
Yep. I'll just make a note there. The fires we had in Tantallon 2-3 years ago now. I know I know people who were affected by that, and their insurance coverage was less than the actual cost to rebuild, and it caused them major issues in getting through that, and obviously additional stress.
So were they just paying that out of pocket then?
I guess so. It's paying the difference out of pocket. Yeah, that's what I understood.
Yeah. So that's always been a tough one. I remember when I used to start, I was trying to be so frugal. So I'd do anything to keep that premium down. But if you ever got in a position where, you had to rebuild what was there and you didn't have the coverage, you could be in hot water. Mm-hmm. The key risk with this is the borrowers cancel and they let the policy lapse. So as a lender, if your borrower cancels this, the house burns down, the borrower doesn't have the money to rebuild it, you're now stuck with a piece of land with a loan big enough for the entire house. So it's really important that you keep on top of their insurance policies and you get it, and then you can see when it's expiring and make sure you get a renewal policy when that time comes.
Yep. And a good insurer will notify the lender if a policy has been canceled or lapsed. It doesn't always happen, because I've experienced that before as well. And I'll go through an example here, but that's what a good insurer will do. They'll notify the lender, and that'll flag us to go out and reach out to either the borrower and give them, 7 days to provide a new policy. And if they don't, the next segment we're going to go through here is going to talk about what you can do to cover yourself if the borrower kind of goes non-responsive on getting you that updated policy.
Yeah, there's a really interesting backup plan available, which is nice. So we talk about that. Basically, private lenders require annual proof of renewal on larger files or repeat borrowers. So as a lender, you always want to make sure that your clients are insured. And then, as Ryan's about to go into here, there's some options as a lender that you can do to help cover yourself in the event that you're struggling to maintain contact with your borrower or unsure of what's taking place at the property.
Yep. Yeah. So should I go through this example right now, or should I go into the other policy coverage first, do you think?
Oh, I want the example, but explain it first, and then we'll do the example.
Okay, let's go through it. I'll circle back to it. Remind me. Okay, so next up is basically, this is more focused on the lender itself. So this is a blanket insurance or a mortgage impairment policy. Okay, so this actually protects the lender's portfolio in the event a borrower's home insurance lapses or becomes invalid for whatever reason. Okay, so this provides coverage to the lender if a loss occurs while the borrower's insurance is inactive or not currently in place, or lapses for whatever reason. Very important for lenders, especially if you have multiple loans, right? So this really simplifies your risk management here. You've got this blanket policy available to you. You can put that loan on that blanket policy, or actually apply a full new policy if you don't hear back from the borrower, and ensure you're fully covered there for the next 6 months or a year or whatever you require. So this would generally cover your standard, right? Your fire, flood, major damage insurance, where the lender's interest in the property could be at risk. Okay. So it's not replacing the borrower's home insurance. It's basically, like a backstop to protect you during that period of transition where you're looking to get that proper insurance back in place. And it's typically, like I mentioned, it's typically structured as an annual policy. I've seen some offered as 6-month policies as well for short-term lenders like ourselves. And it could be based, you could be paying a premium based on your portfolio size, where you can I've seen both examples where you can just interchange loans in and out. You say you have like 5 loans on this blanket policy, right? And then one of them gets new insurance, another loan pays out, they come off. You have another one lapse, you put them on, right? And you can just update this blanket policy every month. Or you actually have like mortgage impairment insurance where the exact file that the insurance lapsed on, and you just simply purchase a new policy to cover yourself on that given loan. So I've seen it go both ways with insurers. Okay.
So it depends what fits your portfolio best. On a smaller portfolio, it's probably easy to have the full blanket versus if you're running a massive portfolio.
And this is critical. This is critical to have because if you don't have it in place, you're literally risking total loss on a given property if in the case of a fire or flood or something major happening like that.
Yeah.
So let's go through this one more here, Neal. Let's you take us through E&O insurance coverage here. I'll fill in any blanks from a lender perspective, and then I'll go through this example and kind of how it all tied in.
Okay, you're holding the example at the very end. Okay. The last one we have on here is E&O insurance, so errors and omissions. If you're in business, you probably already have that for whatever business that you're in, but it protects against professional liability. So mistakes or oversights in underwriting, documentation, or advice. For us in Nova Scotia, E&O is required by law for licensed lenders under the Mortgage Regulations Act. And again, it covers your negligence, any misrepresentation, or failure to perform duties correctly. Even experienced lenders can face claims for documentation errors or compliance oversights, especially as you get bigger. It doesn't volume with volume, things are going to happen, errors are going to take place. And so this will be there to backstop and help with that. It's also important because it helps maintain credibility with regulators and investors. They want to know that, okay, I'm not really at risk with my money, that if one of the underwriters makes a small mistake and we lose $50,000 or $100,000, that it's going to come right back against our return. Annual costs typically depend on the deal volume and coverage limits. So again, if you're a bigger lender, it probably costs a little bit more because the likelihood is a fair bit higher. But overall, I don't think this was, I'm looking back on our policy, it was surprisingly expensive, actually, now that I think about it.
Very expensive.
Relative to the amount of coverage that it offered.
Yes. Yeah. And I'll tell you why too, Neal. So, we've been through this before, but Nova Scotia is the only province in Canada that requires lenders to have E&O insurance. Okay. Yeah. E&O insurance is typically a brokerage requirement. And, licensing is different across Canadian provinces. So in Ontario, to be a lender, you actually have to have a broker's license. So you can get broker's E&O insurance, which is a much cheaper policy. It's in the range of like $3,000 to $5,000 annually. Still not cheap, but it's still, it covers you for any of these potential errors and omissions. In Nova Scotia, being the only province, insurers didn't really know how to handle it out of the gate. And they said, well, these are lenders holding risk on their books. And, there's some, larger deals, there's commercial deals, there's construction deals. So we're going to charge them a crazy amount of money. So we're literally talking tens of thousands of dollars when we started, right? Tens of thousands of dollars to get these insurance policies in place. And as time goes on and you prove your track record, those premiums get reduced. But if I recall correctly, I think we paid in the range of like $35,000 to $40,000 in our first year. Yep. And this will scare all the potential threats of new competitors coming to Nova Scotia. And then deductible? We had $1 million policy with a $500,000 deductible, if I'm not mistaken. So basically a useless piece of paper that we required for the government of Nova Scotia. So thank you for that. Yeah. But, I get what this Mortgage Regulations Act, or MRA, in Nova Scotia came into effect in 2021. And I get what they're doing. It's better to have some policy in place than nothing. So, it used to be the Wild West before then, right? And that's not ideal in something where you're dealing with, the biggest financial transaction in a lot of people's lives. So I'm glad there is something in place, but maybe some kinks still need to be worked out.
100%. Yeah. I've seen a fair bit of this. You see it a lot in the real estate sales side, and there's a lot of claims.
Sure. And of course, I assume it would be required for realtors too, Neal?
Yeah.
Yeah. Makes sense. Yeah. All right. So let me, we'll stop this cliffhanger here and I'll go through this example. I've actually talked about this before on the podcast, but it was probably 40, 50 episodes I went through it. And it's, it's a story that's stuck with me for years. So,
are you a private mortgage lender in Ontario looking for trusted legal support? Meet Grecky Carter Professional Corporation, a boutique real estate law firm in Midtown Toronto with deep expertise in private lending and mortgage enforcement. Grecky Carter closes hundreds of private mortgage deals every year, and when recovery becomes necessary, they handle both contested and uncontested enforcement with precision, from forbearance agreements to power of sale and cost recovery strategies. For lenders who demand clarity, efficiency, and results, Gerke Carter has you covered. Visit gclaw.ca to learn more and safeguard your private lending investments.
This property, I mean, you can look it up. It was in St. John, New Brunswick, multi-unit build, probably about 4 years ago or so. And they were 70 or 80% complete. You know, all the framing was done. I think they were even at the drywall stage inside for most of the units. And got a call one day and said, you know, there was a fire. There was a fire in this place. And I was like, oh, that's unfortunate. So, you know, just kind of scrambling to look at our exposure on the file. And we had, you know, close to $1 million out at that point. You know, we still had maybe $100,000 to go on the credit facility for them to get to the final stage of completion. And the borrower called me and he's like, you know, this happened in like March or April. And he's like, oh, I just looked back in my my email and I found in my junk mail that my insurance policy lapsed in December. And I'm just like, okay. Thanks. What do we do now? So it was a scramble. It was a scramble for a while to figure out what to do. You know, and at that time I was working for a private lender who was owned by a bigger credit union. And of course, you know, there's a major risk of loss at that point. So, you know, a lot of due diligence had to happen in terms of how we pursue this claim. So just to kind of tie all this together, and I don't need to go into too much depth, but so basically the base insurance policy. What's that?
So you killed the borrower.
I didn't say it. You said it. So, you know, the basic homeowners insurance or builder's insurance in this scenario had lapsed. Okay. So we had a blanket policy that we could have put loans on had we known that it lapsed, but the insurer didn't notify us. Okay. So, and their feedback to us was that we don't have to notify you if it's not renewed. We only have to notify you in the case of a cancellation. And I'm like, that is such BS. Like, I can't, like, I'm ready to fight over the phone. Right. So, anyway, so we kind of had that and we're just like, okay, where do we go next with this? So we had our blanket insurance policy. You know, you can actually backdate deals on that. So like we knew an incident happened, and we told the insurer, but we're like, we're going to backdate them on our policy. We're being very transparent about it, and you guys let us know how we manage this. Okay. And then a couple other avenues we had was errors and omissions insurance as well. So we pursued, I think there was actually 5 different avenues. I can't remember them all off the top of my head, but there was 5 different avenues. We could have pursued, you know, the borrower's home insurance for not notifying us. We could have pursued our blanket policy, you know, errors and omissions. I think there was 2 different errors and omissions that we could have pursued those avenues. And we thought we were going to go down the errors and omissions insurance avenue. And our blanket policy insurer ended up saying they would cover it based on the scenario, which I couldn't believe. And what happened as well is our lawyer made a really strong decision. I don't understand like all the legal aspect of it, but basically he got like a summary judgment against the borrower, meaning that we could like go after additional assets. And like, who knows if they actually had additional assets. I know they'd sold the property 2 months before and pocketed a couple $1 million. And apparently that had disappeared already. And, you know, there was questions of whether this was arson or not. So a lot of different things were going on, but our lawyer had acquired this summary judgment and he actually exchanged that to the insurer for this coverage, basically. So the insurer was able to use that summary judgment to pursue a claim against the borrower. And then we were able to just get paid out of the deal. And then I ended up leaving during this time before like the actual financial transaction had come through. But we had confirmation we were going to get fully covered on it because we had, you know, multiple avenues to pursue. And fortunately, one of them ended up working out.
I was thinking that the whole time. That's a really interesting story. And it worked out well for as the lender. But I was curious in my head, like, how was the insurance intending to subrogate that? Were they going to go after his insurance or go after him personally?
Both, I think.
Interesting.
Yeah. And I'm not even sure if it's resolved yet.
Wow.
Yeah, you can pop into all Nova Scotia and look up the latest if you'd like, but I have nothing but bad memories of this, so I've moved along. Probably the last time I'll tell this story. Hopefully that was clear. I know it was a little bit confusing and moving pieces and stuff, but hopefully that just kind of shows you the importance of having these coverages in place as a lender. So 2 more quick ones here. Neal, do you want to cover cyber insurance or keep personal insurance?
Yeah, I'll do cyber insurance.
Love it.
As we're going through this, I'm like, oh my God, we spend so much on insurance. It's actually
we do.
insane.
We do.
this doesn't even talk about like the personal like health insurance and like, anyways,
Yeah, that's
insurance is
true.
a huge part of life.
It is.
So I'll talk about cyber insurance. Again, I think everyone knows what cyber insurance is, but it protects against digital risks, data breaches, phishing, and ransomware. Be honest with you, the first few times they started calling me for this, probably 5 to 7 years ago, I was like, I don't need cyber insurance. Like, this sounds ridiculous. Now, every day, I think about like, how good is this policy? And like, can we make it stronger? Because I feel like it's bound to happen. But obviously, we handle sensitive borrower and investor data. And so hopefully the cyber policy will be in place to cover any breaches and help us with data recovery and even ransom payments. I can't imagine getting into a ransom situation, what that would be like. But I guess they'd probably come in and help with the negotiation.
I guess so. Like it's kind of insane how many phishing emails you see out there now that are like that almost look completely legitimate, right? Like
And
it could
phone
be
calls.
coming from me to you, right? Like make this transfer to X, and like usually, like in our business, it's not following the typical process. But like, how long will it be before they can actually mirror someone's email, requesting money, right? And it's just scary.
It's gotten insane. So I mean, I think this is something that you need to have pretty much if you do anything in your business on the internet, which pretty much everyone does. A big one, especially, is payment processing. Every business has it. As a lender, again, we do obviously loads of payment processing people. We have everyone's banking information. It's extremely important that we have this on top of running a very safe system in-house already. Additionally, you're seeing now, and this is something that's also scary, is a lot of policies that you might assume would already be covering things like this are starting to exclude cyber events. So you really should get a standalone policy to ensure that you're not going to have any issues. So,
and you know what, Neal, this is probably the cheapest policy we have in place.
Yeah, for now, I think what's happening is maybe not a lot of case claims are being made, but I imagine as time goes on, it'll start to increase. Hopefully, if you have it in place, it doesn't go up as much.
Yeah.
But the thing that stresses me out, and we saw this with like Nova Scotia Power locally, is like even if you do everything to your best like way to manage it, you have safeties in place. One of the companies that you work with could easily, and if the bigger they are, the more likely they are to be attacked. And so it's like for us, if someone hacks into the Gmail servers and gets into our emails, like I guess Outlook, there's an opportunity for them to maybe see things that they really shouldn't.
Yep. 100%. Okay. Last one here. We're going to talk about key person insurance. Okay. So basically the purpose of this is to protect the business if a key individual, i.e. an owner, underwriter, principal decision maker, like you and I or Zach, becomes disabled or unfortunately passes away. Right. So it would provide funds to maintain operations, recruit replacements if you ever had to do that, or just kind of get by for a period of time before you kind of figure out how to transition with the business. So, this is something we looked at. We looked at this very early on with our business. Within months of starting. I think it's incredibly important for small private lending firms where the leadership, like us, is actually tied to the deal flow or tied to investor confidence, right? So, obviously, you hope something like this never happens, but it's one of those things. It's like you pay the premium here for peace of mind, basically, right? Typically, this would be structured as a term life or disability coverage owned by the company. Okay. And just, again, it just protects yourself. The business can still meet its obligations, pay staff, pay investors, take in borrower payments, all that stuff there, and just operate the business for a period of time before you figure out how to transition in a unfortunate event of something like that happening.
Ever since this went in, I've been debating driving over you or Zach.
Wow. That's aggressive, Neal. I don't think the policies are that good.
I feel like it was an inside job.
Yeah.
I think this is a super important insurance to have, to your point, if you run any sort of investment fund, because there are key people that know and understand that. Like, I think, not to discredit other businesses, but some of them, the position might be more replaceable in some sense. But when you're dealing with a pool of capital from multiple sources and multiple people and investors involved, there's only a few people that really know the inner workings of what's going on there.
Yep. That's exactly right. And that also, lends to the point where it's, we've talked about it before, the importance of keeping good policies and procedures on hand, where everybody in the business can access those and just document everything, right? Like it's not only going to be good if, something happens or somebody leaves, but, also what if you're transitioning your business someday and then you can literally hand that off to the next party that's coming in. That holds a lot of value.
100%.
Yeah.
This is an interesting, funny thing that came up in my head is the key person insurance with Heinz ketchup doesn't allow the few people that have the recipe to fly together. Like you're in breach of you're in breach of the well. Because think about it, if you put the 3 or 4 people that have the recipe on one plane and it goes down, the insurance payout's going to be like $5 billion to pay out Heinz.
I wonder if Pepsi or Coke have similar policies in place.
They probably do. If you have this secret recipe, you're on this policy, and then you're unable to you got to see the whole roster of who's on an airplane first.
Yeah, too funny. Yeah. All right. Anything else, Neal? Before we start wrapping up here?
No. Get your insurances. They feel like a ripoff, but ultimately they are extremely, extremely valuable, and it's all fun and games until you actually need to make a claim.
Absolutely. So key takeaways here, always get your lawyer to confirm title insurance and home insurance before funding. And do put that on your lawyer as well, right? Like if you've got a good lawyer, a good real estate lawyer who's funding your mortgage transactions, put it on them to have those policies and show you proof before the deal actually funds. Consider a blanket mortgage impairment coverage as your safety net. I think this is also critical, especially when you start getting up into the double digits of loans. For your business, most situations, E&O insurance is going to be a must. Smart to have cyber insurance, and key person insurance protects continuity of the business as well. So, Neal, you just alluded to it. Insurance is probably not the most exciting thing in the world, but it keeps your lending business from becoming a risky bet.
100%. And the last point I'm going to make too is making sure you read the stipulations within your insurance, because all of it's for naught if you're not following the rules and guidelines the insurance companies put into play. Because when it comes time to make a claim, they are going to do everything in their power to not have to pay out. So make sure that you are on top of it.
Who are you kidding? You don't read those, Neal.
I've never done that, but that's why the key person insurance is on you.
I've literally never done that. You can at least get ChatGPT to summarize it for you, though, right?
Exactly. Get ChatGPT to manage that you're following all the rules and regulations.
Yeah.
Sorry, to your point, even in your story, what did the insurance company say to you? It's because it wasn't a cancellation; it was a non-renewal or whatever it was.
Yeah, basically. Yeah,
so,
and we
BS like that.
We got them. Yeah, we got them on the policy within like the 30-day window. So we knew something happened, but we had this coverage in place, and it ended up working out for us. I don't think it would work out for everybody in that situation, but we were lucky.
Yeah.
So thanks everybody for tuning in. Hopefully you found this helpful. Please do subscribe, leave us a review for the Canadian Private Lenders podcast. Give us some topics to talk about in the future. We've got a bunch of things coming out. We've got more interviews. Neal, you want to add something in?
We got a new studio coming.
Oh, yes, absolutely. Big news.
Yeah.
So yeah, this should be ready probably within our next 2 or 3 episodes. We'll be ready to go.
Yep.
Super excited about that. That's the other thing too, is that we didn't have a huge following. I wouldn't say we still have a huge following, but we didn't have much of a following at all on video on YouTube. But it's like over doubled in size since our new producers at Creative Crew with Andreino have taken over. So do check it out. The video editing has been really good. You've probably seen some of the reels we have out there. I had someone I'd barely met before at the hockey rink in my daughter's hockey game a couple of weeks ago come up to me and be like, I saw you on TikTok. And I'm just like, I literally don't know who you are. So something's working, I guess. So I know you felt that before, Neal, but it's
very
cool. A little bit strange, but cool at the same time. So, and if you want to talk more about insurance or give us, suggestions for different ones, or talk about how we can help, protect your portfolio, just reach out to Neal or I.
Thanks, guys.
Thanks for listening.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan MacNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.